Welcome to the New York Outlook for Thursday, the 7th of December 2023. Starting off with the economic calendar, we have unemployment related news for the USD coming out 30 minutes into the New York session. In terms of the actual news release, it doesn't prevent us from taking entries or being triggered by the entry. However, we have to consider what the release is and its impact on open trades, and if we're going to take new trades, then the trades should align to the narrative suggested by the news release. So yeah, I guess in terms of a bit of a conclusion, depending on the news release, and given that from the London Outlook our daily bias is longs, we essentially need this news to be negative, and if it's negative it will suggest a weak USD, which will suggest that GBPUSD should go long. If that narrative is supported, then we can continue to look for longs, but jumping into the charts, what you can see is the last 4-hour candle closed bullish, and now we're pulling back. Nothing really material has changed on the 4 hours, so I'll jump onto the 15-minute. And on the 15-minute, what you can see is price essentially tapped into, well, it broke a bunch of OBs, supply OBs in this leg, suggesting a change of character for the order flow. However, at no point did we actually get demand holding. Now that we're coming into the New York session, we have to pay attention to this London range and then trade accordingly. But in addition to this, what you'll see on the 5-minute, we have a similar situation where at no point can we validate that that demand is actually holding, and because of this we can't validate that demand is in control. So our bias hasn't changed, given that from a daily perspective today is the 4th day and we're expecting a bullish candle closure for the day. So shorts are off the cards, longs remain on the table. However, until we get evidence that demand is indeed holding, there's nothing further to be done. The next break of structure will likely come from this area. Our next or alternative option is, because this is now the primary leg, we can look for 15 and 5-minute OBs to support a new order flow generation to create that secondary leg, and then trade the demand in control from that stage onwards. Perhaps just to illustrate that fact, if we say that this is the primary leg for the pro trend, we can then look for price to come in, then change character with the failure of this OB, come into demand can hold with a break of structure and a body break right here, giving us this demand in control, and we could trade this. However, remember that we do require session liquidity, previous session liquidity, which would be the London range at the time of trading in New York. Remember, our low of the day is already established. If the low of the day is taken out and New York creates a new low of the day, then that would invalidate any longs for the day, and is indication that it's more than likely that the day will actually close bearish. So provided that we actually in this process of validating a new secondary leg, if we actually liquidate this side of the London range, let's assume this is the low of the London range, and assume it gets swept, and then we order flow and we indeed do create the secondary leg, then we can definitely trade from here. In terms of the stop loss placement, we can probably just use this as a stop loss, or if we're close enough to the actual low of the day, we can use that, and that would probably be ideal, especially if the stop loss isn't too big, and we'll know that if this is taken out, then we were surely most definitely wrong for the day in terms of daily direction, and that would probably mark the end of the trading day for us. That's pretty much it. Given the looks of how things are, we essentially do need the New York session to open, and then we'll have to assess what the news release is and then look for this, or the alternative is the news release will body break this, and perhaps on the 15-minute we'll create a wider candle, and if the fib aligns we can enter there targeting something higher up. Let's just see how far have we moved already. We've moved about 50 pips. Given that it's still the start of December, we can probably still base the daily range on November data, so we can go with a 90 odd pip daily range right there. So there is certainly scope for movement to the upside, but yeah, we'll have to see. The alternative is that this primary leg is just early enticement and it's going to be used for liquidity to come deeper into this pro-trend OB, and then we'll create a new pro-trend leg. Like I said, we can't long because of the daily bias, but we are in this pullback phase, and there is a chance that the pullback phase will actually materialize. You've got these OBs right here, and it looks like there is chance for a secondary leg to be created on the 5-minute and perhaps the 15-minute to validate those short positions. But as it stands, I'm still steadfast on the long bias, and we'll just evaluate how things go, evaluate the news release, and then take it from there. That's pretty much it for the New York outlook, and we will talk, I guess we'll chat again for the end of day review.